Alright guys, now that we have learned the basic principles and the basic principles of accounting that we are going to use in recording our payroll, the next thing we are going to do is to go to your employee center. Once you come to employee center, click on employee center. If you click on it, wait for it to open. So now this is our employee database. We have only three employees. If you don't know, if you don't have any employee records yet in your system, you can just come to this place. You're seeing new employee, click on it. Now when you click on it, it will open up a page like this form for you to fill. So this form will contain basically the information of the employee. Let's say this we have Emmanuel. We have Emmanuel Chijioke. So let's say this is the name of our employee. Any other thing you can just leave it. Though I will still teach you what other fields means later, but I just want to use this basic information to teach you how to record employee in how to register an employee in your QuickBooks database. So we have just registered this place. After you fill this information, you can click OK. So this is just a status. QuickBooks is asking whether you want to use all those things. So forget about this, say leave as. So once you click on that, we have added our new employee. So that is how to record employee, to register an employee in your database. Now, having done that, what next? What are we going to do next? What we are going to do next is to come to either our accountants menu here or company menu here and click on make general journal entry. So once you click on make general journal entry, you see the journal will open up. When you see this, you can either say okay, check this place to ask it not to show up in the future again, otherwise you leave it. So now this is our journal number. Journal number is number 3. Now the payment, the salary we want to pay is the salary of November. So the salary we are going to pay now is salary for November. So what we are going to do is change the date from here, put it November 30th. The salary we are owing as at November 30th, that is what we are interested in. So once you do that, now this is where you have to think. We have, let me go back. We have 3 accounts, like I said, that are going to be affected. We have the QuickBooks, we have the bank account, we have the payroll liability account, and we have the payroll expense account. So if you now search here, let's say payroll, though my accounts have number, okay, we have payroll expense accounts. The account number is 66000, which is the expense account. Then we have the payroll liability account, which is 24000. That's the account number I assigned to it, and I have an outstanding balance I'm supposed to pay, an outstanding liability of 3000 naira I'm supposed to pay to a particular employee. I'll show you that later. So these are the 2 accounts that will be affected for now, because we want to know how much we are paying our employee first. We want to know how much we are paying our employees first. So we have to capture it as a liability so that QuickBooks will be able to remember that, okay, we are owing this, we are supposed to pay this. Now, when you do that, you come back. Let's go back to our general journal, make general journal entry. So when you come to that, remember what I said. I said first, we are going to know the amount we are paying, the salary we are paying. How much are we paying? How much are we owing? That's the first thing we are going to ask ourselves. How much are we owing? Then we now tell QuickBooks, okay, we are owing this, and this is how we can tell QuickBooks that this is how much we are owing. So first is an expense, and remember the principle, the rule. The rule says debit all expense. Debit all expense. So first is an expense. Then we'll now go to our payroll expense account, which is 6600. That's our account number for that. 6600. That's the payroll expense account number. All right. How much is the salary? How much are we paying? Okay, let's say we are paying this person. We are paying this person 15,000. Okay, we are paying this person 15,000, and it's an expense. Remember, the rule says debit all expense. So we are paying 15,000. Now the minimum we will say being salary for the month of November 2022. Now, who are we paying? Very, very important. Who are we paying? We are paying Emmanuel. This is the person we are paying. We are paying Emmanuel. So once you do that, we now come back. Now we have identified that this is an expense and we are paying Emmanuel, and it's a salary for the month of November. We have not paid it yet. We are just trying to enter to tell QuickBooks that okay, this is the amount we are owing. So we have already raised the Monday account we are debiting, which is payroll liability, payroll expense account. Now, which account is given? Which account is given now? The account that is given is now going to be our payroll liability account. Our payroll liability account. I'm just using given and take because of the principle that says debit the receiver and credit the giver. So the giver now is liabilities account. And remember that liabilities account alone has nothing in it, because the money has to come from somewhere. So liability account is just to help us know that okay, we are owing this amount. So this is the amount. We have completed the double entrance principle here. Now, who are we paying again? We are paying Emma. We are paying Emma. So we have recorded that. Now we have the payroll liability. The payroll expense account is debited and the payroll liabilities account is credited. That is just the principles. Understand it that way. So after you are through with it, after you are through with putting recording, putting all the details, inserting all the details, you now click on save and close. Yes, just read it and say yes. Once you say yes, okay, let me now take you to the report so that you see what happened actually in what you just did. Now, first of all, let's go to reports, company and finances. Let's go to profit or loss standards. Profit and loss standard. This one is still using profit and loss standard because it's an old version of QuickBooks. So once you do that, once you click on that report, you see that it's blank because there is no transaction in 1st December. The transaction we had is going to be 30th November. 30th November. That's the transaction we are interested in. After you have done that, you now click refresh. Now you can see our payroll expenses is 98,000 because there are other expenses that has to do with payroll already recorded. So if you want to open that, you can double click on it. You will see what constitutes that amount. So you can see that this is the one we just recorded, Emmanuel Chijoke. We recorded Emmanuel Chijoke, and this is it, 15,000 naira. So once you do that, once you're able to identify that, expand that. Now you can also choose to view it just you can view it by by employees alone. You can see which employee received this is Emmanuel, which is the 15,000 naira you're seeing here. Now, this is the report. It's an expense. Okay, we want to see it now. We want to look at it as a liability in our account. So when you want to look at it as a liability in your account, you go to your reports. When you go to your reports, go to companies and go to balance sheets standards. Click on it. Now come down to your liabilities. If you come down to your liabilities, you see your payroll liability as 18,000. 18,000. Why is it 18,000? If you don't know why it's 18,000 naira, you just double click on it. Double click on it again. It will open up. Then you now see what makes it 18,000. Now, initially we have an outstanding of 83,000 naira, but we paid 80,000 naira. So the balance remaining is 3,000 naira. Now, when we raise another payroll liability, we have 15,000 naira. So plus that 3,000 naira, it makes it 18,000. That's the 18,000 naira you're seeing. You can also choose to view it by employees. So to choose to view the employees, you can see the same report. Now that we have known that we have an outstanding liability of 15,000 naira for Emmanuel and 3,000 naira for another employee, which we have not paid to, or maybe due to one reason or the other. Now, what we are going to do, let's also check our chart of account and see what happens to our chart of account. Now, look at our chart of account here. Our chart of account payroll liability is 18,000 naira, as you can see. So if you don't want to go through that long process, you can just come to your chart of account here. You see. Now, if you look at your payroll expense, you will not see any amount in it because it's an administrative expense. It has nothing to show here as an amount, as a balance. It doesn't have balance. It's just an expense. So if you want to see whether there's a record or any transaction recorded in this payroll, like just double click on it, it will open up transactions that are recorded. Now you can see these are the transactions that are recorded in QuickBooks. These are the payroll expenses recorded in QuickBooks, and this is the one we just recorded. This is the one we just recorded. You can choose to expand it again to see what constitutes that amount. All right, now that we have understood how to raise the payroll liabilities, amount payable, now what we are going to do next, how do we capture the payment? How do we capture the payment? If we pay these employees now, how do we record it? Remember, now we want to reduce the amount of liability we are owing. The liability account already is a credit transaction. It means it's a liability. That's why it's a liability. Now we want to pay it so that it will reduce the amount we are owing our employees. Now what we are going to do next is also apply this principle. This is what we are going to do now. We are going to now debit our payroll liabilities account and also credit the account that is paying that amount. So let's go back to our QuickBooks. Come back to our QuickBooks quickly. So come to accountant or company, make general journal entry. It's still the same thing. When you come to this place, make general journal entry. What you're going to do is the day still remains 30th November, and the journal number we have to change now. So this now, instead of payroll expense account to be debited, now we have payroll liability account to be debited. So payroll liability account to be debited with 15,000 naira, the same amount. Then we now say this place will now be being payment for the month, being payment of salary for the month of November what, 2022. And who are we paying? We are paying Emmanuel. So Emmanuel is one we are paying. Now, instead of payroll expense account again, what we are going to change here, we're going to pick the account that is the money is going to come from. We're now going to credit the account that is giving out the money. So the account that is giving out the money is our bank account. It's our bank account. And under the bank account, we have the FCMB account. So that is what we are going to do. So once we capture that, this will automatically be filled for you because you have already put it initially. Now we have Emmanuel again. So we have now completed the double entry principle of this particular transaction because we have the debit and we have the credit. Now, this automatically will reduce the amount we are owing. It will automatically reduce the amount we are owing as a salary or payroll liability. So once you fill out this information, you click save and close. Yes. Now, once you click save and close, now look at what happened to your payroll liability account. Where is your payroll liability? This is our payroll liability account. So our payroll liability account has reduced by the 15,000 naira we just recorded. So if you want to view the report, you can equally go to your profit or loss. The profit or loss will not have any change. it will still have the same information as before. It will not change. The amount there will still be the same because it's an expense. It takes accumulative. It accumulates all the expense that has to do with payroll and display them to you so that you see. But it doesn't have any difference. So the effect, where you're going to feel the effect of what we just did, is when you go to your statement of profit or loss, which is balance sheet. When you click on balance sheet, you look at now, you see that the payroll liability amount has reduced to 3,000 naira, the initial one we are owing. So the 15,000 naira is no more there. If you want to see, you can just double click on it and it will open up. As it opens, you see how the transaction goes. You see, first of all, we have the liability for 15,000 naira, and when we made the payment, it is now debited, and the balance, which was initial, which this one, which is this 3,000 naira, is now brought down. So brought down or brought forward, it's still the same thing. So we still have an outstanding liability, a payroll liability of 3,000 naira that we still need to pay. But basically, this is how you're going to record payroll liabilities in QuickBooks, and it's very simple. And I believe and I want to be convinced that you understand this very well. Please, if you have not subscribed to this channel, do so by clicking the subscribe button and like button so that you will not miss out on any of our future videos. Also, please share to your friends so that they can also learn. It is very, very important. And if you're also in need of QuickBooks application, maybe you don't have the money to pay for the subscription and purchase it, get the software yourself, you can also DM me, or you can also send me a message. I will get the software across to you so that you can practice as well. Thank you for watching and see you in my next video.